Wow. Dow up 552 points, 6% across the board. Take a look at this. Dow up 6.6%, NASDAQ 6.5%, S&P almost 7%, and the Russells. Remember I said if the market starts to go bullish, pay special attention to the Russells. I've been saying that. 8.5%. Very, very nice. And check this out. I want to pay special attention to what's happening at this very moment. We said if we close below 850, we're going to be at 800 before you know it. We started going that direction. I said, there it is. We're going to head down, 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 down. And then we did it in an about face and started screaming back up. Watch Matador's video today. He called it, watching the trend. It's a divergence. Watch that, study it, understand it. But then we get what looks to be a double bottom type formation. Here we have an engulfing pattern, an engulfing pattern. Is technically not called a hammer, because a hammer is when your lower shadow is 2 times or more the body with little to no upper shadow, but it still resembles kind of a hammer type formation, but it's golfing, closing almost at the day's high. There is a little bitty shadow right there. Now, what did not happen? Watch this. We hit support here, we didn't hit support, we didn't get down there. We changed before that. So watch this. I'm gonna draw a trend line going from this swing low to this one. Now I'm a little early on drawing this line because we haven't established a leg, not yet. But we have these moving averages to deal with, and then we have this major trend line coming down to deal with. So let's say I'm going to increase this just ever so slightly. Thicken up this line a little bit. That's going to be major resistance. How do we come up with that resistance? Right here, resistance, 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 and it should act as resistance yet again. Now watch the formation I'm about ready to draw. I'm going to get rid of this line for the time being. I have this line going, so let's take, and I'm going to increase this line size also. Pull this back just ever so slightly. Pick up that shadow, swing low. We have a, perfect. Now, the question is, what formation do we have? Do we have a double bottom? Well, technically speaking, a double bottom is when you pierce this, the most recent swing high in that double bottom. The swing high that separates the two double bottoms, this has to pierce this. That means the S&P needs to get over 1,000 to be considered a true double bottom. Now, if we hit our head here and drop, what formation do we have here? This is called a descending triangle. Get it? When you have a flat bottom or a semi-flat bottom with a descending upper trend line, you have a descending triangle. Descending triangles are bearish. They are a bearish formation. And what you wait for is it to break. So right now, 850 is a key area. If we can close below 850, not just go below it, close below it, then it should continue downward. Now, if this is going to be a true double bottom and it's going to be a bottom in the markets, then it's going to have to clear this 950 area and then clear the 1,000. And then you wait for a pullback, and then you're all in on the long side. But I think it's short-lived. Now listen, I'm telling you, the markets, the stocks are up big time. But we had a 7-year high in jobless claims. It's as high as it's been in 7 years. Jobless claims. Walmart posts profits, but narrows its full-year outlook. We had Intel slashes fiscal fourth quarter guidance. I mean, there's no reason for this big jump in the markets. There's no reason. But nonetheless, this just shows the power of technicals. See the technicals? We get a support area. Technicals always win. It's amazing how we as traders always need a reason why something went up or why it went down. Let the chart be your reason. We were at support and we bounced, period. End of story. That's what happened. It's funny because I have a picture of a news site that said, stocks down, aggressively due to recessionary fears. And then the markets intraday come screaming back. So their latest breaking news story was fears of the recession dissipate, stock market surges, and they weren't able to take off. They hadn't taken off the bearish news site yet. I actually took a picture of it. I took a snapshot of it, capturing that the same news service was, talking out of both sides of their mouth, showing that why the markets were down because of recessionary fears, and then why we got a surge is because recessionary fears had, dissipated. So it's funny how we always come up with a reason why something popped or why something dropped, and it can't be because we broke support or we broke a resistance area or we're at support or we're at resistance. It's just really interesting. People need to start waking up to the power of technical analysis. So anyway, there's my long-winded way of saying we made a higher high here. Look at this, higher high. If we break these areas, we could go bullish here for a while. This is a very strong candlestick. And before I leave, let's go to the spiders. And let's pop up this volume here. Look at the volume. Very nice volume. We'll take that volume. That's nice. I want to see it break those moving averages on bigger volume. But tomorrow's Friday. Come on. It's going to be low volume tomorrow. It always is. And but Monday is going to be a key day. Watch Monday. If you have big bullish volume come flying in on Monday, we might want to be looking at some long positions. I do have some short. I have a big short position right now, just hedging all my longs I picked up today. I picked up a number of longs. So there you have it. Happy trading to you. See you in the forums.